Am I the only one who didn't know how to properly read trends? I used to get caught in the middle of nowhere trading, and I took trades that weren't in meaningful places, and I had no idea where to take profits. So as a result, I lost money. But I've spent the last 2 years of my life looking at this market in this specific manner, and now I have a pre-trading routine that prepares me for 3 possible trends. Now, I know what you're probably thinking, Cleve, trends don't always paint the whole picture. And you're absolutely right. There are false signals. And there are times when the trend does end and it comes to a reversal. So it's very important that you have another strategy to rely on. So if you'd like to see more of what I do in those particular situations, please check out the link below in the description to learn more. But when you learn how to identify trends and when to react, you'll become a more consistent trader and you become more consistently profitable. If this sounds good to you, let's dive into my pre-trading routine for identifying the trends. So if we're going to be trading the trends, first have to ask ourselves, what is the trend? What is the definition of a trend itself? And so luckily there's only 3 different types of trends. Makes it really easy to be able to trade. Number 1, we have an uptrend. And this is when price of an asset is consistently going up. Higher high, higher low, higher high, higher low. And this indicates a bullish sentiment in the market. And I have to say that if you are part of our community, you have a tool, resource to you known as the algo trend that makes being able to identify these trends so easily on the chart, as you can see here. Number 2, the downtrend. This is when the price of an asset is moving lower, making lower lows, lower highs, lower lows, and lower highs consistently on the chart. And this indicates that this price or this asset is in the bearish sentiment of the market. And third, we have the sideways, otherwise known as the range bound. And that is a trend that is when the price of an asset is moving in this sideways range. It is not really in an uptrend. It is not in a downtrend to where it is not indicating the high, high, high lows or the low, high, low lows. As you can see, it is found kind of a baseline of where its ceiling and where its floor is. And this really just indicates a neutral sentiment inside of this market. So now that we know what the trends are, next is a 4-step easy process to be able to trade it. So let's go ahead and let's get started. So step 1, identifying and confirming the trend that we see on the chart. You want to start by analyzing the current price action and identifying where you are in this trend. Confirm the trend by looking for those series of high highs, high lows, or the absence of, so that you can see this horizontal or this sideways trend. Now, if you ever have doubts as to what trend you're in, zoom out to a bigger time frame to provide you a more clear picture. Now, step 2 is you're going to want to pull out your drawing tools and you want to be able to identify those key levels of support and resistance. So right here, I'm drawing a support box, and then right here, I'm going to be drawing a resistance box. And so once you have these identified, now you have magnets of what is important inside of the market. And based on these magnets, I like to decide what I'm going to potentially do next as far as an entry or an exit. So now that we have the support and resistance areas identified, step 3 is setting your entries and setting exit points. Once again, now that the plan is in place, the next step is patience, the price action, and then the overall execution. The key here is to remain patient until price reaches one of these meaningful areas, one of these meaningful magnets that we drew on the chart. And once there, I like to look for price action and volume to confirm. This is when I can see myself reacting. Once I see preferred price action, I confirm that the risk is worth the reward. With a 3-to-1 minimum risk to reward ratio or better, that is when I can see myself executing my bracket order. Nothing less. Anything less than 3-to-1, I simply do not execute. Now, my bracket order has a stop loss order in it to limit
my potential losses if I'm wrong. And it also has a limit order in place to secure profits if the trend were to reverse or it hits my predetermined target. So as we can see here on the example, we have a buy zone or a support zone, and we have a resistance, otherwise known as a sell zone. This is where sellers like to come in and take profits, as you see. So once we get back down in the zone, we could see the bullish price action. We could see that it starts to make a high low and wants to leave. And so with a trade being identified right in this area and your risk right here, you can see that this is going to be our potential risk inside of this trade, and we already know where we want to take profits. And so that would be the potential reward inside of this trade. And so would I risk this small amount to gain this large amount? Absolutely. That is that 3-to-1 minimum risk to reward that I like to identify. And then step 4, the last but not least step, is to manage your risk and monitor the position of your trade. Now, by drawing on the chart and having a plan before trading, this makes it easier for you to manage your risk and manage your emotions. I mentioned earlier that I used to be a very emotional and less logical trading because I had no real plan. Having a predetermined target zone allows you to quickly and accurately assess the risk involved and whether this trade is even worth that reward. Never risk your hard-earned money when the reward isn't out there for you. Adjust your position size accordingly to manage your risk and protect your capital. Once again, if the risk is not worth the reward and more than your account can handle, simply do not execute that trade. Now, continuously monitor the trend and the progress of your trade. This includes moving your stop losses up along the way and until the price hits your target, or taking partial profits along the way until it gets to your predetermined target. And if the trend shows signs of weakening or reversing, consider adjusting your exit strategy or taking partial profits to lock in those gains. Once again, traders, we intend and we trade to have profits in the end. Now, personally, I like to plan the trade and then trade the plan. So I stick to my original plan. Now, as we can see inside of here, we plan to risk this much and to take profits as we get into this zone. So what I can see myself doing in one of these situations where if the trend does start to get weak, okay, I will lock in partial profits and I will move my stop loss up to where it makes sense and let the second batch either get there or tell me that I'm wrong. Once again, as we come down into this area, this one, maybe not so much. We didn't quite get into that area that we identified as support or resistance. But once we do get back in here again, as you see, and then it starts to leave, makes it very easy to take that trade and to be able to lock in profits as it comes into your predetermined destination. And here's just one more example. Here's an example that I prepared on a favorite ticker named Caterpillar. We've all seen them around inside of our neighborhoods and inside of construction yards. So what I went ahead and did was, when looking left, I once again drew in one of these boxes. That was where support, okay, could end up being a magnet in the future. And as you can see, once the price action got in there, we see that bullish price action, we see the volume pick up, and then it goes to leave into that previous area. And that would give you a nice risk right here to take in all those nice rewards, okay? And then the next time we go ahead and draw this zone, this was a resistance zone inside of this uptrend. And so if this is a resistance zone, then it can in the future become a support zone. And look at this, traders, it's exactly what happened right here. Once price got back into that zone, you have another bullish price action, nothing but buying going on, and then you're able to take it with a nice risk to reward type of management. Because once again, we drew in this zone, and now prices got back into this zone yet again, started to get bullish. You could see it on side of the price action and inside of the volume, and now it's going back up into that resistance. And so this is being able to identify that risk and taking it into a minimum of 3-to-1 risk to reward. But you gotta have the patience to do that.
So to wrap things up, implementing a pre-trading routine focused on identifying trends has completely changed my trading approach. By analyzing the price action, confirming trends, drawing your support and resistance areas, helps set those entry and exit points so that you're able to manage risk and monitor your trades with confidence. And I have become a more consistent and profitable trader since. This routine allows you to make informed decisions and stay disciplined in the face of the market fluctuations. And if you follow this pre-trading routine, you can improve your trading performance and navigate the markets with confidence. But remember, trends don't tell the whole story. You need a comprehensive strategy to cover you when the trends do reverse or those false signals occur. Luckily, we teach you everything that you need to know to approach these markets with that confidence. Check the link in the description below, and remember to like this video and subscribe and share it for more trading videos like this one. See you next time.